What's up, everybody? Michael and Coco here. Look, everyone was wondering yesterday if they should buy the dip. Now the question on everyone's mind is whether or not this is going to be a sustained rally from this dip. Take a look over here at this tweet by Mark Minervini, a stock market wizard. He said, "Today is a great example of how entering right is key to holding through pullbacks. Rip your face off rally today, but still profitable on our Q short." Just so you know, he went short the Qs prior to the sell-off. Sticking with my original stop, no need to panic. Some of the biggest rallies happen as snapbacks during corrections. Now, if you remember yesterday, we talked about how sometimes in bear markets or bear markets when they start to begin and you get these big sell-offs, you can get these rip-roaring rallies. And that is what we're seeing today. We're just wondering now if it's going to be sustained or not. So I'm going to go over key levels to watch in the SPY going into tomorrow, but then I'm also going to show you a couple interesting charts that present that we are still in a risk-off environment and not to get too overboard and get sucked in by this current price action. Let's get into today's show. All right, everybody. This is going to be a shorter than usual episode. I wanted to just call out this kind of resistance band up here in the SPY. This is something to watch out for because if the broad market can't get through this level, chances are there's going to be various stocks struggling to get through it too. Now you can see we saw this big rip-roaring move. We talked about this falling wedge just yesterday, and we got continuation to the upside. The 5-day moving average is still declining, and we closed again once below it. The PMO looks like it's going to be a bearish crossover. The futures market right now, I don't have it up, but it does look so far so good. We'll see what happens later throughout the night. So where's the resistance band? I'd say 435 to 436. When we get into those areas, it seems like there's a lot of selling pressure. What do I mean? Well, when we came up here last time over here on July 8th, we gapped down the very next day right here. And when we got up here, you can see there was periods of distribution and then another sell-off. So that's an area to watch. Now, overall, today was an amazing day, right? It was a big, just big solid green candle, and then on top of that there was a lot of breadth behind it. We had a significant more advancing stocks than we did have declining stocks, so we had a lot of participation. And that happens though after big sell-offs, and that was not really a big sell-off by any means. We were only about 3% down, but it was bigger than what we usually get, and we saw a big just a big green candle right after that. So this is what's important to look for. One, a close below the 50-day moving average and breaking the low of this previous day's low. If we get a daily close below that, or if we get some sort of reversal tomorrow, and I think that's going to put a lot more fear back in this original sell-off here, and it could continue a little bit lower. Keep in mind, if you just look back to March area over here in early 2021, you could see this big green candle was followed through by 3 more selling days to the downside. So, right, we hit the 50-day moving average, a solid big green candle, but then all of a sudden, bam, 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 we started selling off again. So just keep in mind that this right here could be sucking in more buyers to potentially head lower. So far, though, everything looks good. We would need confirmation that it's going to break down before anything, okay? So really quick here, too, the quarterly chart, we're trading above the upper Bollinger Band and we're disconnected from the 5 EMA, and that's the most frequently tagged EMA. We haven't tagged it here for now 3 quarters, so you know eventually it's going to happen. I couldn't tell you when, but also what's just insane here, that's something that I could not find history of, is the whole candle it's trading outside the upper Bollinger Bands themselves. So it's just very interesting times. The IWM, we talked about how if we get a whipsaw back, it would be people covering shorts and buy the dippers. Well, guess what we saw today? We saw a big rip-roaring rally today, up 3% on the day. It's nice to see for small caps, but they still haven't gone anywhere for 5-6 months here, okay? So keep in mind, we still have overhead resistance. The 20 period, the 100 period, the 50 period, we're all below those moving averages. So many people believe, people that I really look up to in this technical world here, that we're not going to break through this all-time high. This is just a fake out move, and then we're going to head lower. So, I mean, I don't know. I'm going to just follow price. I'm not going to say, betting against that from happening. Me personally, I just want to follow the price action, and if we start breaking above 230, 250, I mean, that could be very, very good. So we will see. Another note here is on the weekly time frame, we cracked through this, and now we're immediately getting bid back up, but we're still below the 5-week moving average, and that could act as a level of resistance, and that's at 221.67. So be mindful of that level on the small caps. Now, why is it important to pay attention to small caps? Well, the small caps, I mean, a lot of these meme stocks are trading on the IWM. So it's important to just be mindful that if the IWM starts, just falling apart here, chances are a lot of these meme stocks and a lot of these highly speculative stocks will start to fall as well. So it's something to be mindful of. This pattern right here is the RVX. And you can see here we had rising wedges, and then falling wedges. And it's still within this technical construct, and it's been just very well respected. And we're right there around the upper range of it. So, geez, if this, if we do start breaking down, I would imagine this is going to start breaking up with some force. And, I mean, this would be a crazy target, but 165 to 170, where the pre-COVID high was, and then we had this gap up to all-time highs. If that was filled, that would be just a killer spot to potentially go long. Let's look at the IWM on the monthly time frame. This is, we came outside of this channel, and we've done that a few times, but from the downside, and these are known as exhaustion breaks. And when we get exhaustion breaks, they're typically followed very soon with a move back in the overall trend, the channel. Now, we're still above this, and that could be the start of a bigger, newer trend. And that's always possible. Just know that for the last 5 months, I mean, since we broke out, the price action hasn't gone anywhere at all. And now we're sitting there right around the the upper trend line. Also, the PMO on the monthly time frame got pretty overextended, and when we reached those levels prior, it lasted, a year to 2 years of just really going sideways, doing really nothing. So it's very possible to see this come back within this channel, but it's also, like I said, it's a highly speculative market right now. So we need to play it day by day, week by week, and see what takes place. As it stands right now, though, we're still above the channel. It's still within bullish overall pattern, so everything is fine at this particular point in time. Just something to be mindful of is, like I said, this weekly break right here that's getting bid back up, and then also the daily break right here where we're getting that whipsaw movement, okay? Because there's going to be a point in time, keep in mind, where shorts are going to want to re-up, right? So if they're covering and it goes up and the dippers get, start moving up, there's going to be a time where they want to start taking profits. So where will they want to take profits from? Well, it could very well be right here at around 225. Why 225? Well, there's been supply there before, demand there before, and more supply there before. And now we have all the moving averages overhead. So, yeah, that's still, probably a nice shoot up. We're at, we close at 218, so to 225, it's, that's a good, decent gain from this point. Just keep in mind that there could be a lot of supply hanging out there. And if we get all of a sudden this big supply drop, well, the price could put in a lower high, and we might well follow through to take out another lower low. Now, I know this sounds bearish and all, even though today was a very bullish day. I enjoyed today. I'm sure many people did. But we need to talk about both the bearish perspectives and the bullish perspectives. You need to be aware, because if you're standing there at your computer and you're placing trades and you're like, oh, dude, buy the dip, everything's totally fine, and then you just become complacent, well, complacency can lead to bad things. I don't know how else to put it. So there's a couple of charts here that I want to just show that still resemble a risk-off type of environment. The first one's the dollar on the weekly time frame. The week's not over. We have multiple days left. So, not too much to worry about here, but we did break through an interesting downsloping trend line, which is also known as an inverse head and shoulders. So this could be the start of a stronger move to the upside. Well, if people are fleeing to the dollar, that's more of a risk-off environment. That's how I perceive it. And there's been an inverse correlation between the S&P 500 and the dollar. So if the dollar goes up, chances are there might still be pressure in the equity markets as people flee to risk-off assets. The next one I want to show is the TNX. The TNX got very overextended to the downside. So yeah, we're seeing a bounce today at 2.37%. But, it's put in a nice hammer candle, so it does seem like it wants to bounce from here. Okay, so that's actually not a horrible sign here, as this could potentially go head higher, and that could kind of re-inflate the reflation trade, and we might see more strength in cyclical stocks. But what I do find interesting here is on the TLT, right? Bonds have been moving up significantly here for quite some time, pricing in some sort of risk-off event to occur. And with the market that pressed significantly higher today, I mean, and equities, just various equities and small caps, they started ripping up higher. I mean, the TLT, it's not even down 1%. All right. Yes, it formed a bearish engulfing. Yes, it was above the upper Bollinger Band. That means to me that it just needs to take a little rest. That doesn't mean that we're going to get some sort of huge move to the downside here. Is it possible? Yes. But what I found interesting today was that, I mean, it was only down 1%, not even. Okay. So it's something to be just aware of, that the risk off assets, they're still totally fine right now. And the risk on assets, they're seeing a big rally, but we don't know if that's going to continue at this particular point in time. So my view remains the same. Be bullish, but be very, very cautious given this current environment. That's all I got for you on today's episode, everybody. We went over some key levels in the SPY that I'll be paying attention to going into tomorrow. On yesterday's video, I concluded it with basically saying, I'm feeling more bullish, but I'm feeling a lot more cautious. Okay, so today played out really well. Now it's time to make sure that if you did capture in some moves, okay, start updating your stop losses, maybe peel some profits, and start paying attention that if there is weakness, don't just ignore that weakness. Best of luck out there. See you later.